So
we appreciate you being here and giving kind of the lowdown on Ribbon and what's going on and the changes and everything, because I think it's important that our agents have as much information as possible to be as as informative as possible with all their clients. So so we have Andrea on the line. So she is the I guess the BIC and the owner, and she is the grandpapa of this whole thing.
Okay.
Jeffrey. I appreciate you taking your day off to hang out with us for a few. We heard about the changes. We have a bunch of agents that we're going to join. You never know how many is actually going to show up. Right now I've got two.
Exactly.
Karen and Drew here to learn all about Ribbon and how you can help us get a cash offer accepted, or, help them buy before they sell. So
yeah,
I'm going to let you take it over. And I'll keep watching as a host and letting people in. I'm not sure what you have planned. I've got it so you can share your screen also.
Yeah. Okay, cool. Yeah. I don't have any fancy presentation. I just run through some scenarios, real life things, and see how we can help.
Awesome. Well, I'm packed with questions too, so
okay.
Be prepared for me to interrupt.
Perfect. I like it.
I'll let you take it over now and and start your stuff.
Okay.
But I just want to introduce you, Jeff. For those of you that don't know me, Drew, I don't think I've met you, sir. I'm the loan officer for Atlantic Bay Mortgage, and been making some phone calls into the team just to introduce myself. So what better time than now is to say hi. One of the things that Andrea asked me is said, hey, you know what's going on with Ribbon? And I said, well, they've just had some pretty big changes on the way that they do things. And I think it would be appropriate to get this information into your hands as quickly as possible. So Jeff has been with Ribbon for quite a while now. And as far as a loan officer goes, I've closed like 12 Ribbon deals and over the last year and a half. And it has been the smoothest, easiest thing that I've ever done. And the clients have benefited so much by being able to secure homes that they would have never been able to compete against some of the cash offers that are going there, and B, also really help them preserve some of the money when it comes to, say, the appraisal coming in under the offer price. There's been several times in the last year and a half where Ribbon actually, they stepped up. They did what they said they were going to do when it came to, cutting a check to that seller for that appraisal gap. But with all that said, Jeffrey is where it's at. He knows what's going on best, and I want to just turn that over to him. Him and I have been in great communication. He's really good at returning phone calls and being available when needed and escalating things. And I'm just proud to know him and thankful that he's my partner. So Jeffrey, thank you. And I'm going to turn the rest of this call over to you and learn them.
All right. Hey, thanks, Tony. It's always great to have partners. That's what makes the transaction process so easy. So Atlantic Bay has been a great partner for Ribbon. So hey, that just makes the process a lot smoother for everyone involved in the transaction. So it's great to have the opportunity to speak with you guys this morning and see how we can maybe get a few more clients under contract for you utilizing the Ribbon program. So our main mission is to make home ownership achievable for anybody who wants to own a home. So if you have like a first-time home buyer, somebody who's FHA, VA, even conventional in some cases, or if you have a buyer who has a home to sell and that home sale contingency has kind of pushed their offer to the back of the line, Ribbon is a perfect solution for them because we back their offer in cash, which, hey, cash is king in this market. And it gives the seller that peace of mind that Ribbon's offering the appraisal protection, so they don't have to worry about renegotiating with the buyer if the appraisal comes in low. And B, it's a guaranteed sale for them once they get past the inspection period, because either A, the buyer's going to close with their lender, preferably with Tony at Atlantic Bay Mortgage, or B, Ribbon will step in and purchase the home for the buyer in cash and then lease it back to them for up to 180 days, giving them a chance to either sell their home, get their financing squared away, and start the repurchase process with us. So how our fees would work: the buyer needs to have at least 2% down in deposits, either due diligence, earnest money, a combination of both. And then if they can close and not need Ribbon to actually purchase the home, we will credit them 1% back at closing. So essentially they're paying Ribbon a 1% fee to secure the home that they want. So let's go through our buy box. We just expanded it a few months ago. It's single family homes, does include townhomes and condos, 100,000 up to $1 million. It has to be on less than 4 acres of land, 1965 or newer, unless it's been fully renovated. No foreclosures or short sales, no mobile, modular, or manufactured homes. So that's our buy box. It used to be 700,000, but we have increased that to $1 million because we were really starting to run into some higher end homes that, especially people that have a home to sell and they want to get into a higher price point. So now we do have a solution for them. So how to get your buyer? I don't know if everybody here has a Ribbon account. If you don't, then it's no problem. We can get an account set up for you. If you have a buyer that you think would be a good solution for Ribbon, you would just enter that buyer into your Ribbon dashboard. You would upload their pre-approval. Our underwriting team will just reach out. If Tony's the loan officer, we'll just reach out saying, hey, has credit, income, and assets been verified? I think there's like 5 or 6 questions. When the rates went up, we did ask questions like, hey, is this rate locked? Things like that. Now, if the buyer has a home to sell, we do ask you 3 questions regarding their current home. 1 is, what's the address? 2, the expected list price. And 3, when do you expect that home to be on the market? Our underwriting team just checks to make sure, hey, that home is in an area that should sell quickly. We just want to make sure it's not some anomaly that's 40 acres in the middle of nowhere somewhere that may take a little while to sell. So we want to make sure, yeah, their current home should sell quickly. That way, if they do need us to purchase a home for them, they should be able to repurchase during that 180 days. So once the pre-approval has been verified, you would enter in the home or homes that your buyer is potentially interested in making an offer on. Our valuations team will come back and give you a value. This is the part that Tony brought up, that things have changed. We used to just give you the Ribbon max value. However, in the past few months, we got absolutely hammered on low appraisals. So it wasn't sustainable for us I had a deal back in April that we were $34,000 off. So we wrote the check, but that's just not sustainable to have to write high appraisal gaps. So we give you 3 numbers when you put the home in to be valued. The first number is the Ribbon value. That is, we are backing that 100% up to that number. So let's just say homes listed at 285, we give you the first number at 290. So if you wanted to write the offer 290 or below, you can. It would just be 2% of the purchase price. Now we'll give you a second number. It will be a more aggressive number. If the buyer wants to be more aggressive and go up to the second number, by all means they can. Let's just say it's 310,000 is the second number. The difference is the buyer would have two options how to cover that appraisal gap. They can choose a pay now option, which I like to say it's like getting car insurance. You're paying a premium regardless if you have an accident or not. So if they chose the pay now option, they are on the hook for 25% of whatever that gap is between the first and second number. So if they wanted to go up to 310, they could. It's a $20,000 gap. They would need to have $5,000 down in deposits, and then Ribbon would be on the hook to cover the other 75% if it didn't appraise. So they put 5,000 extra down in deposits. Now they have the peace of mind that if it appraises anywhere under 310, hey, that's on Ribbon to eat that difference and credit the seller. So I would say 90% of the buyers since we started this back on May 4th have chose the pay now option. It's the safer option. Granted, it's non-refundable. So if it did appraise at 310, unfortunately, we're not going to give them that $5,000 back because, hey, we were taking the risk of paying the other $15,000 if it didn't appraise. So that's the pay now option. The pay later option would be if your buyer feels comfortable rolling the dice and they're like, hey, I feel comfortable that this home's going to appraise at 310. If it doesn't, then I can either bring the difference to the closing table and then they wouldn't owe us any additional money. If it appraises at 310 or higher, great. They wouldn't owe us money anyway because there was no appraisal gap. Or this is where it gets a little more complicated. If they don't want to bring that gap to the closing table, that's fine. They can wait till they cash out, refi, or sell their home within the next 30 years. When they go to do that, they would owe Ribbon whatever that gap is. Let's just for number's sake say it was $20,000 plus up to 25% of the home appreciation. However, it is capped at 3 times. So if the gap was $20,000 and they wait 20 years down the road and their home appreciates by $400,000, the most that they would owe Ribbon would be 3 times what that gap is. So $60K would be the most that they would have to pay Ribbon back if they chose the pay later option and that gap was $20,000. So I'll stop there because I threw a lot at you with the appraisal protection. I just want to see if any questions before I move on to another section.
Yeah, one question for you on that second option where you were saying, hey, you can pay now, and let's say it's a $20,000 difference. So you're saying, hey, you can pay $5,000 now. If it ends up appraising $20,000 short, is the buyer good because they already made that $5,000 payment, or are they then also covering like 25% once?
Yeah, no, they only cover that 25% once. So if they went 20, up to that 310, they're good. Anything 310 and below now, Ribbon would be the one crediting the seller the difference. So if you choose the pay now option, you're paying for that insurance for that 25% of whatever that gap is, and then you are good now up to that number, and then Ribbon would be the one to actually credit the seller the difference.
Sure. And then on option number 3, the appreciation, selling off the appreciation upside. If it was a $20,000 gap, again, that you guys covered, you said max of 60,000. Let's say they bought the house for 300,000 and then 5 years later, they sold it again for 300,000. Are they just paying $20,000 back, or are they paying nothing?
Yeah, they would just pay $20,000 back.
Okay.
Yeah. So that would pretty much be, they would owe no other fees. If the home didn't appreciate, they would only owe us whatever that gap was.
And then for all these scenarios, it's still just 1% as long as they close.
Correct.
with their lender.
Correct. Yeah, it would be 1%, and the appraisal protection covers them in either scenario. If we have to purchase the home for them, that appraisal protection is there for them when they go to repurchase from us as well.
Got it. And how exactly does that work on the repurchase? If you guys close with cash, so let's say the house appraised for 290, you guys close at 310. Then when they go get their loan, are they getting a loan based off of the 310 amount or the 290 amount?
Yeah, so if we bought the home if we're going to buy the home for them and it's under contract at 310, that we're just going to buy it from the seller at 310. We could get an appraisal. The odds of us getting an appraisal are low, so we would just buy it at 310. And then when they go to repurchase, that's when they would have the appraisal. So let's just say at that point, they did the pay now and the appraisal comes back at 295. When they go to repurchase, we would just drop our sale price down to the appraised value at that point. So they don't have to worry about an appraisal gap because we're selling it back to them at the appraised value.
Got it. One more question.
Yeah, absolutely.
As far as the time frame that we should expect, if I go look at a house with my clients, we submit it into the Ribbon dashboard. How quickly will we get these numbers that you're talking about? Or
yeah. So I always say, if you know in advance, like it's Wednesday, say, hey, I'm going to show my client 3 homes on Friday. As long as you have those in 24 hours before, then we'll have that valuation completed within 24 hours. So you'll have it. Now, I get it with real estate, buyer throws something at you the last minute and highest and best is due that evening. All you would have to do is you would call me, text me, email me and say, hey, Jeff, put this property in. Is there any way we can expedite this? I would put a rush on it and we can typically have that back within an hour or two.
Got it.
Even after hours? Even after 5?
So yeah, that's a good question. So our hours of operation during the week, it's Monday through Friday, 9 a.m. till 8. So as long as you have that request during the weekend, I would say by 5:30 or 6, we should have that back to you that evening. And then on the weekends, we are 9 to 5. So as long as you have that request in, I would say by 3:30 or 4 on Saturday or Sunday, we should have that back to you the same day.
So those were really great questions, Derek. Thank you. I do have a question and I should have written it down, but what's the minimum? I know you go up to the million, but what's the minimum?
100,000.
Okay.
Hey, Jeff, and I'm just popping in at the last minute. So I did have a quick question. So what does a buyer have to qualify in order to change it over to cash, or is this just with any loan that's already pretty much in escrow?
So for us, for a buyer to utilize our program, they have to have a pre-approval from a lender. So they have to at least be mortgage eligible. So if you have a buyer who, hey, it's going to take a while because they have some credit issues, we probably aren't a good fit for them. That's where like a company like Landis or Knock would be a better option because they have a longer lease back time. For us, 180 days is our max that we would lease the home back to them. So if it's going to take them a little while and they may not be able to repurchase in that 6 months, we might not be a good fit for them because once we get to that 6-month period and they can't buy the home back from us, unfortunately, we would just put the home back on the market. So, if you have a buyer, they just have to be pre-approved. If they're pre-approved with Tony, then, we would just reach out, verify the pre-approval, and they would be good to go. But we do work with all loan types: USDA, FHA, VA, conventional.
Okay, good to know. Thank you.
Yeah, you're welcome. And just to let you know, with VA, because we are really running into this, the VA threw something at companies like Ribbon a few weeks ago that kind of shifted things a little bit. The VA does not allow third-party companies like Ribbon to have the buyer pay our fee. So we're trying to work around that a little bit. Before, we would just invoice the buyer outside of closing. They shut that down. So if you do have a VA buyer, your solution would be either to ask for seller paid closing cost to pay for the ribbon fee, or the other alternative. Hey, I was an agent in Ohio before I moved to Tennessee to work for Ribbon. I wouldn't really want to, you work too hard for your commission to pay the ribbon fee. However, that is an option as well. So either as an agent, you can pay the ribbon fee, or what we're starting to see is, agents asking for seller paid closing costs so the seller can pay the ribbon fee.
So Jeffrey, this is Karen. So you're referring to the 1%.
Yeah, correct.
That's the
Yeah.
ribbon fee. There's
Correct.
not another fee on top of that
No.
that you're referring to.
No,
Okay.
this is just the ribbon fee. And this wouldn't, like, if you have a buyer who's VA and you know that they need ribbon to purchase the home for them, that would not apply. Because, we're buying a home for them. And then when we sell that back to them, they've already paid the ribbon fee because we bought the home. They wouldn't have to worry about that in that scenario. I'm just talking about the ribbon boost, which is the 1% program.
And is that paid up front, Jeff?
So it's collected in deposits. So either due diligence, earnest money. It's just held as long as we have copies showing that the due diligence and the earnest money covers the ribbon fee. Then the ribbon fee actually gets it's on the CD on at the closing table.
Okay.
So I'll move on to the next requirements. Some of our requirements. We do require at least 7 days for an inspection period. By all means, if you do 14 days, keep doing what you're doing. We just require at least 7. So, the buyer would pay for the inspection. We just require a copy of that inspection report gets emailed over to us. Our inspection team will look it over. We'll come back with what's called ribbon required repairs. Now, those repairs only need to be completed if we had to step in and purchase the home. If they were able to close and not need us, then none of those ribbon required repairs would need to be completed because, hey, we're not the one buying the home. And I know last summer, it was a little bit of a pain point because we kind of threw some things on there that I didn't think we should have had on there, but we've kind of whittled down our list of things that we would put. We try to really focus on safety and structural, like the home has to have a smoke detector. If the home has gas, it needs to have a carbon monoxide detector. Windows and doors need to be operational. Safety, mechanical type of issues, like the HVAC system has to work. We're not going to nitpick and say, hey, there's 3 shingles that are discolored. We're not looking for things like that. We're just trying to look at safety and mechanical, because if we have to buy the home, we essentially become a landlord. So we just want to cover our bases and make sure that we're leasing back a safe and sound home. So that's the repair procedure part. The next part, the only other requirement for us is if like, hey, Tony can close them in 30 days, when you write the offer, mark the closing date 30 days out. Now, if they have a home to sell, they're not even going to put their current home on the market until they move in to their new home, then the soonest ribbon can close would be 14 business days. So to make your offer more competitive, you would just do a 14 business day close. We would buy the home and then they would put their home on the market. And then once that sells, they would start the repurchase process. So that's pretty much the only requirements when it comes to ribbon. When you notice, once you put the home into the dashboard and you're ready to write the offer, you would just write the offer right through our portal. It will have your state contract in there, so you don't even have to worry about writing a contract separate. You would just write everything through the ribbon system, submit it for signatures. Once your buyer signs it, you would just download it as a PDF and then send it off to the listing agent.
Jeff, a question, something that popped up for you and I on a previous deal. Homeowners associations and rental requirements or non. If you could kind of address that a little bit and
Yeah.
let them know that that could be an issue.
That could, yeah. We got the gray area of the HOAs, and we're starting to see some HOAs that are giving pushback because there were a lot of investors out there that are just buying homes and then renting them back, or people that are renting their homes out as Airbnbs. So some of these HOAs have started to clamp down and say, hey, we don't allow short-term rentals. If you purchase in this community, you have to own the home for a year before you can rent it out to somebody. So that's just something that you definitely want to be mindful of. Make sure that there aren't any HOA restrictions that would say, hey, you have to rent it out for at least a year, or you've had to own the home for a year, because Ribbon would not be able to step in and purchase the home for your buyer because we wouldn't be able to rent the home back. Now, where the gray area is, and I wish that we would fix this, because if the buyer is able to close, if they could close with Tony, and we feel really confident that that's going to happen, we shouldn't have to worry about an HOA restrictions because we're not the one actually buying the home. However, for Ribbon's legal team, their concern is, hey, what if that crazy scenario happens where the buyer's financing does fall through at the last minute? They spent all this money in due diligence, and then Ribbon would not be able to purchase the home for them. We would just have to purchase it and then put the home back on the market. So your buyer would be out, their deposits. So I would just be very mindful. If you are going to use Ribbon, make sure you just look with any HOA restrictions. We have had some luck calling the HOA association and saying, hey, listen, Ribbon, we're not just renting the home back to just some random person. This is going to be the homeowner that we're renting the home back to. So we don't have to worry about, they're going to take good care of the home because they're going to own it here in the next few months. So we have had some exceptions be made. It's just sometimes getting a hold of somebody from an HOA association is a challenge. I've called several, and to get a response, it doesn't always happen. So I would just be mindful of that, when you're looking to submit a Ribbon offer, to make sure that the HOA will allow rentals if your buyer needed us to purchase.
And Jeff, is there just a standard template for that you can just send to the HOA as you're putting in the offer to avoid that roadblock down the road?
I don't know if we have anything. I mean, I've typed some things up. I can see, I don't think I've deleted it. I had to clean my computer out because I was running out of space. But if I can find that, I would just I can email you that template, and you can submit that to the HOA.
Okay, perfect.
I mean, one of the things that I've seen, Chantel, is some of the agents I've worked with did not go get the CC&Rs, both the listing agent or the buyer's agent, and didn't look at them before they engaged in this process. So I would say before we find once we find it and we know we're going to make an offer on it, we've got to get a hold of those CC&Rs to be able to identify whether their HOA has some type of rental restriction on them. Because if we're going to use Ribbon, it could cause a lot of financial pain to the borrower themselves. So, and it's better to be cautionary than it is to be cavalier, I guess you could say, or what do you call it? Under promise, over deliver. I know it takes a little extra time, and it might a few phone calls, but if it's a good listing agent that has that property, they should have those CC&Rs right there at their fingertips and be able to send them over to you.
Also, I just have one other quick question. The interest rates for Ribbon, is that comparable to just the traditional interest rate from just a regular lender?
So we're
I'll take that one, Jeff.
okay, cool.
Yeah, no problem. So Ribbon doesn't set interest rates at all. They're not in the loan business. You would come to somebody like myself. I work for Atlantic Bay Mortgage as a senior mortgage banker. And, depending upon the credit score, depending upon job history, all the different things that a lender looks at would determine kind of what the interest rate would be and what the market is bearing at the moment.
Yeah, the
Makes
only for Ribbon, if we did need to step in and purchase a home for your buyer, as Tony alluded to, we are not a lender at all. So the only thing that we fee for your buyer through Ribbon, if we did purchase a home for them, they would have to pay us a monthly rent. And the nice thing is when you go to put that home to be valued, that's the third number that will show up. It's what the monthly rent would be. So they'll know before you even submit a number or an offer for them, hey, if Ribbon has to buy the home for me, this is what I'm looking at in monthly rent. So that way there's no sticker shock for them. Everything's pretty transparent.
So in that case, would the buyer their name would still be on the deed, even though Ribbon is technically the owner?
So you would write the contract with the buyer's name, and then when we purchase the home, title, everything will be in our name. We'll pay for the closing cost of the first transaction. And then when the buyer goes to repurchase, that's when everything will shift back to their name.
Okay.
Hey, Jeff, I'm not sure if you mentioned this when you were talking about your buy box. I might have just missed it, but is this only for primary residences?
Yes, it is. Yes. Only primary. We avoid investors and second homes just because our mission is to make home ownership achievable for everyone. So the people, we're trying to fight for the little guy who they're just trying to own their first home. So if we helped out investors, then we're kind of going against our mission. So yeah, so this would have to be a primary residence. Now we have noticed a little bit of a slowdown, with the market, and we've seen some changes. In the month of March, I did like 41 transactions. We did almost 1,100 transactions as a company. That's the most that we've ever done. April was around that same number. And then, second half of May, things have kind of shifted. So we have started to notice, sellers, they're not getting as many offers on their home. So we're seeing offers that aren't having to go up to that Ribbon max value. And then we are seeing sellers that are willing to, if they're not going to pay all of the Ribbon fee, they're at least willing to pay part of that. So those are some of the things that we've noticed with the market kind of shifting a little bit and slowing down the past couple of weeks. I don't know if you guys have personally experienced that, but before there were times this spring where there might be 7 buyers, Ribbon buyers, interested in the same property. Now there's times where I got a buyer submit an offer and I look and I'm like, oh, great. I'm not competing against any other Ribbon buyers. So we're starting to see a little bit of a shift. So I'm glad it was a little crazy there for a while. So.
And I'm sorry, and I might have missed this because I came in about 14 minutes late, but Jeff, can you just give me a high level overview of how my client would purchase that home back? Like, what are their options? What does that look like? And some timeframes?
Yeah. So if you had a buyer who either hey, they're not quite ready to purchase or to be financed and get a loan and close on their own, or if they had that home to sell and hey, maybe their home isn't going to sell in time, then we step in, we purchase the home for them. So they would need to have 2% of the purchase price down in deposits. We would keep that 2%, and then we would rent the home back to them for up to 180 days. Now it is, be mindful of what their loan type is, because if they're conventional or VA, they could start the repurchase process immediately. If they are FHA, they would have to at least wait 90 days because of the 90-day flip rule. However, there is something called identity of interest. If they don't have 15% down, they need to wait the full 180 days and they could repurchase on day 181. So if it's an FHA buyer, just know that we give them technically 210 days because we know there's a chance that they may not be able to repurchase until day 181. So they do have 7 months to purchase back. Whereas, if it's USDA, conventional, or VA, we're pretty firm on the 180 days buyback time.
And does
So,
oh, sorry, go ahead, Jeff.
Oh, no, I was just saying, so when they go to repurchase from Ribbon, they wouldn't owe us any additional fees. When they go to repurchase, they don't have to worry about putting down earnest money, any deposits. We would just sell the home back to them, either at what we purchased the home for, or when they go to get an appraisal with their lender and it comes back short, Ribbon will just drop our sale price to match the appraised value. So if their home appraises for more than what we bought it, we're not here to nickel and dime anybody. We're not here to collect a little bit of appreciation. We will just sell it back to them at what we purchased the home for.
Oh, I like that. That is a really good sell. I can sell that. Yeah.
And then with because we get questions, because the rental, it is a little bit of a sticker shock. It automatically gets generated. So we don't have any control over the rental. I think our valuations team uses House Canary. So they kind of set what, kind of give a suggested rental amount. So the system generates it. Our rent, it's market value rent. It's our cost of capital, carrying cost. We pay the HOA fee and insurance. So you'll notice that when you see the rental amount, it's going to be higher than what their mortgage is. So ideally, if they can, 80% of the buyers who use Ribbon are able to close with their lender and they don't need us to actually purchase. But for that other 20%, if they're conventional or VA and they can purchase back really quickly, that way they don't really have to pay that much in rent. It's just FHA buyers. It's just good to know, like, hey, you might have to rent from Ribbon for 6 months. Are you comfortable paying this monthly rent until it's time to repurchase? So that's pretty much everything on the Ribbon side. If you guys have questions, just fire away.
I had a question about the appraisal and the seller concessions on a VA. So with that appraisal gap and getting seller concessions on a VA, what if it doesn't appraise for that much? Like, are we still doing the appraisal gap on that? Like, what are your suggestions on that?
Yeah. So on that, that's where it gets a little tricky, and we're trying to come up with a solution. Either see if there could be some lender credits to help with that, because if, let's just say, homes, the Ribbon values 300, Ribbon max values 310, so the buyer can't pay any of the Ribbon fees. So if you wrote it for 310, the Ribbon fee would be $6,200, and if the buyer chose the pay now option, that's an additional $2,500. So you would really need to ask for $8,600 in seller concessions, because the seller would have to pay that difference upfront as well. Because any of the ribbon fee can't fall onto the buyer, and we consider the appraisal protection piece as part of the ribbon fee.
Okay. I mean, it could be done because the seller would still get their amount, whether they have.
Yeah. So if you wrote it for
We're just
310,
talking above and beyond. Okay.
yeah. So if you wrote it for 310 and it comes back at 290, the seller is still going to get their 310. Ribbon will just credit them $20,000 at the day of close.
Okay. I was trying to figure that out in my head the whole time you were talking. Sorry.
Yeah.
Thank you.
As far as additional addendums to the contract, I know you said that you guys generate the contract through your dashboard. Are we able to add additional addendums? Like,
Yes.
I had a recent client where like we were trying to, from the jump, just negotiate a new roof. So we had a additional addendum that said, hey, we want this type of credit to be payable to a roofing company at closing.
Yeah, absolutely. That's a good question. So for ribbon, there's just 3 addendums that get attached. One's our transaction sheet showing, either the buyer or seller is paying the ribbon fee. The second is our proof of funds, just showing, hey, we're good for the money. And the third is a cover letter that explains ribbon to the seller and the listing agent, just in case they're unfamiliar. As account managers, we try to reach out to every listing agent, and if they're unfamiliar, we have that conversation. But that PDF of the cover letter at least gets sent. And then when you go into the offer itself, it will have a place where you can upload any disclosures that you need, like seller possession, any property disclosures, mineral rights, the roofing issue that you said. That's where you would just upload any disclosures at that point, and it would just automatically attach to the offer.
I've used it a few times, Drew. It's actually so much easier than doing it through our DigiSign and everything. Their program's pretty nice.
Right.
Yeah, for our North Carolina, if it's a North Carolina deal, it's pretty smooth through our system. South Carolina, I think it's better now that that the contract changed last week with the due diligence, because before it had some issues because it wouldn't allow you to put in an expiration date, things like that. But we've made that process in South Carolina smooth as well. But yeah, most agents like our system. We have agents, for whatever reason, that write non-ribbon offers through our dashboard as well. So
we can do that.
Yeah, you can write traditional.
This is a thing.
Yeah, you can write traditional offers through the ribbon system.
I just learned something new. Thank you. I'm
You're
excited
welcome.
about that because I like yours better than ours. I didn't
Okay,
say
yeah.
that, though, being owner and everything. Shh. Don't tell anybody. Cool. Doesn't sound like anybody else has anything. Well, Jeff, I want to thank you for your time. I appreciate you taking your day off to spend a good almost an hour with us talking about ribbon and how they can help. So
Yeah, absolutely. And let me put in my email address for everyone. So if you don't have a ribbon account, you can just email me. I'll have your email since you emailed it to me, but I'll just need your cell phone number, mobile number, and you can go ahead and I'll create an account for everyone. So just email me. Okay, perfect, Karen. I'll save your information. I'll create a ribbon account for you. Anybody else, just feel free, email me. I'll get an account set up for you. And hey, if you have any questions, feel free to reach out to me.
Jeff, did you drop your email in the chat?
Yes. Yeah, it's
Okay.
Jeffrey@ribbonhome.com.
Okay. All right. Thank you. Got it.
You're quite welcome. And I'll put my cell phone number in here. There we go. So, hey, it was great speaking with you guys. Enjoy the rest of your Wednesday.
Thank you so much. Thanks.
Thanks.
Thank you.
Bye.
Bye.
Bye, everybody.